Hi everyone, today I'm going to be talking about one of my favourite holdings, SOFI Technologies, or SOFI, ticker symbol SOFI. I'm going to try and cover it in 5 minutes or less, just a quick speed run. So basically, SOFI is a competitor to PayPal and Square. It's trying to build this time a super app ecosystem where they balance many things like lending, financial services, and the Galileo API for payments. So they do a lot. Most of the business is based around lending, student loan refinancing, personal loans, home loans, that type of thing. They recently acquired earlier on this year the company called Galileo, which is a payments API for businesses and financial services. So they've made an investing platform and a brokerage. They have got a crypto brokerage. They do credit cards, things like that. So again, they're just trying to create this wide ecosystem, an all in one type of ecosystem, much like PayPal and Square. It's trying to do, particularly Square, and it's predominantly aimed at young people. You can get these people on student loans and personal loans, and then you can get them to use your whole ecosystem. And the reason they're doing this is because there is 500 million accounts up for grabs. Many people in the US and North America have more than one bank account, and there are many outside the top 15 banks, or even outside the top 4 or 5 banks. This is a really big opportunity. Legacy banks are slow moving, and don't innovate anywhere near as much as these nimbler players like SoFi is trying to be. And you can see that from the recent financial results, which are incredible. Revenue is up again for the 5th quarter in a row. Total membership is up nearly 100% year over year. They've added 377,000 new members in 1 quarter. It's the second highest ever. Total products are up 108%, so over doubling. And it's the 5th consecutive quarter, year over year, triple-digit growth, which is fantastic. And the investment platform, credit card and money drove 79% of the user growth, which is pretty incredible considering some of these are some of the newest offerings. I think this graph really illustrates the strength of SoFi and that they've roughly quadrupled the usership from quarter 1 2019 to quarter 3 2021, which is just incredible. They're continuing. They've accelerated from their early stage growth when you would expect that it would be much faster at a lower rate. And they just continue to perform in this metric. They've been at near 100% values for the last 4 quarters, which is incredible. And this is so important, building a strong network for a company like this, is its ability to cross-sell other products. Some of these users may only use 1 or 2 products, but hopefully for SoFi and for investors, then they will continue to find this ecosystem sticky, continue to use it. They may just be using the investment, they might be using the crypto, and they'll continue to be shown adverts for things like student loans and personal loans, home loans, using the SoFi money. I think this is a really sticky ecosystem that once it's got its hooks in, people are going to be compelled to use other products from SoFi if they find those appealing. I think that really shows in the usership. The usership continues to grow at a really strong rate through recommendations and marketing. Usership is the true test of whether financial services are going to stick or not, in my opinion. Moving on to Galileo, which is another source of great growth for the company. Galileo was bought by SoFi in around April 2020, so you can see that growth has accelerated tremendously since then. It's basically, they bought it for $1.2 billion, and it's an API and payments platform. The API makes it easy to create quite sophisticated consumer and business-to-business financial services. Everything from some things that are simple as deposits and bill payments to point of sale authorization and account setup. And you can see that, again, when I was mentioning the usership is the real review, in my opinion. And usership is absolutely exploding. Prior to this quarter, there was 4 quarters of over 100% growth year over year, which is just incredible. As you'd expect with skyrocketing members and accounts, revenues to follow. They've increased their guidance from the original 2021 guidance by about $30 million, which is not insignificant. And they're now expecting an adjusted EBITDA profit. So not a real profit, but adjusted profits are good enough for me when this is a company that's growing at 60% annual rates. And you can see that this is actually accelerating from 2020, which is kind of to be expected. But this is a company that really is firing on all cylinders, revenue growth-wise, membership growth-wise, margin growth-wise. When you're a company putting up these type of membership account and revenue numbers, starting to turn a profit, then the market's going to take notice, and the market has taken notice over the last 2 or 3 months, I'd say. It's now trading at a price of sales around 23, which is not unrealistic. This seems like a fairly reasonable valuation for a company that's growing at this rate and this sustainably. And the market cap's around 18 billion when you're thinking that this company wants to be a square and is growing at extreme rates. I think over the next 5 years it's going to be a tremendous performer, and I'm happy to have it in my portfolio. Thanks. Please like and subscribe.